Welcome, curious minds. Today, we're diving into something really interesting. It's this paradox, how a sector that we often think of as, well, traditional utilities is actually right at the forefront of this massive energy transformation.
Yeah, that's quite a shift.
So, our mission today is a deep dive into American Electric Power, AEP. We're looking at their latest Q2 2025 earnings call, the press release that went with it. We really want to pull out the key insights. How is one of the biggest utilities in the U.S. handling just unprecedented demand? And, strategic growth, big financial moves. You'll hear about some surprising reasons behind their success and what it really signals for the future of power.
It's fascinating. AP's CEO, Bill Furman, he basically said the demand growth they're seeing now across their whole 11-state area, he hasn't seen anything like it in his entire 45-year career. That tells you something.
45 years. Wow. That really does frame it. And I guess that transformative load growth, as you called it, it's showing up on the bottom line, right?
Yeah,
Because AEP didn't just have a good quarter, they had their best ever second quarter for operating earnings in their entire 100-year history.
exactly. 100 years. We're talking $1.43 per share. That translates to $766 million in operating earnings.
$766 million. dollars. That's
Yeah.
that's huge. What does that really tell us, though, about how strong their actual business is? Is this just a blip?
No, definitely not a blip. I mean, this kind of performance, it speaks to their strategy really working. It's why they're confident enough to guide towards the upper half of their full-year earnings range for 2025. That's $5.75 to $5.95 per share.
Mhm.
And they're sticking by that long-term growth rate target to 6 to 8% operating earnings growth.
Okay.
And it's worth mentioning, the official GAAP earnings, those were even higher in Q2, $2.29 a share. That was boosted by a sort of one-time regulatory thing. But the point is, both numbers,
Hmm.
really strong. It shows the strategy is paying off.
Right, sustainable growth. And that kind of performance, it needs strong leadership, doesn't it? I saw AEP brought in some new faces recently. 3 senior executives.
Yeah, really seasoned people. Doug Cannon, he's now president of AEP Transmission. Huge role given transmission is, what, 55% of their earnings?
Wow, yeah. Critical piece.
Absolutely. And then there's Rob Bernstein, the new general counsel, and Johannes Eckert, who's the chief information and technology officer. It feels very strategic, bringing in expertise right where they need it for this big expansion push, legal, tech, and especially transmission. The CEO seems really confident in the team, talking about accountability, performance, trust. Sounds like a bit of a cultural focus, too.
Okay. And it all ties back to those main priorities they keep mentioning, right? Financial strength, operational excellence, like running the system well and getting good results with regulators and lawmakers.
Exactly. It all fits together. And that sets the stage for this incredible growth story.
Yeah, let's get into that. The demand picture. You said the CEO hasn't seen anything like it.
He really hasn't. It's genuinely unprecedented across their footprint. We're talking about a generational shift, not just, the usual ups and downs.
So let's talk scale. AEP now has firm customer commitments, actual signed deals for 24 gigawatts of new load by the end of the decade. That's up from 21 gigawatts they reported before. 24 gigawatts signed and sealed. What's the significance of that, and who needs all this power?
Well, having those firm commitments, they call them letters of agreement, LOAs, and long-term electric service agreements, ESAs. That's absolutely crucial. It means AEP isn't just guessing about future demand. They have legally binding contracts. It protects them from volatility if usage dips unexpectedly. Predictable revenue.
Got it. Locked in.
Locked in. And the drivers. It's mainly data centers, huge power users.
Yeah.
Plus manufacturing coming back to the U.S., reshoring, and just general economic growth. Geographically, it's spread out. You've got load in the SPP region, PJM, that covers places like Ohio, Indiana, and ERCOT down in Texas. Texas is actually a huge piece of that 24 gigawatts, about 13 gigawatt. A lot of that is crypto mining, interestingly. Texas is becoming a real hub for that.
13 gigawatts just in Texas. Okay, so 24 gigawatts signed up is massive, but then there's this other number. Beyond those deals, they have another 190 gigawatts of load actively asking to connect to their system.
Yeah, it's almost hard to grasp. 190 gigawatts. That's 5 times their current entire system size, which is around 37 gigawatts.
5 times. Why AEP? What makes them the go-to for these huge power users?
That's the key question, isn't it? It really comes down to their transmission network. AEP owns and operates more of those ultra-high voltage 765 kilo V lines than basically everyone else combined. Think of it as the biggest, strongest electrical highway system in the country. That capability is incredibly attractive to someone needing massive amounts of reliable power, like a data center.
So they have the infrastructure capacity, or at least the backbone for it.
Exactly. They see these inquiries, this 190 GW, as just unprecedented growth opportunities, and they're working hard to turn those requests into signed deals like the 24 GW they already have. And an interesting side effect adding these huge users can actually help keep rates more stable for existing residential and commercial customers. Spreads the cost of the grid over a bigger base.
Okay, that makes sense. But connecting that much load takes time. You mentioned data centers need power quickly. AEP is looking at these Bloom fuel cells as a sort of bridging solution.
Yeah, it's quite innovative. For data centers especially, getting that full grid connection, the big transmission lines built out, that takes time. We're talking typically 5 to 7 years for the whole interconnection process.
5 to 7 years. Right.
So these Bloom fuel cells, they're exploring using them as a way to provide first power much sooner. It's a lower risk way to get a facility up and running while the larger grid connection is being built. We're seeing it happen already. Amazon Web Services, CalLogic in Ohio, they're using fuel cells. It's a practical way to bridge that gap.
Very clever. Okay, so they've got the demand, they've got the network advantage, they're looking at interim solutions. But a huge part of this for any utility is dealing with regulators and policymakers, right? AEP seems to be putting a lot of focus there.
Oh, absolutely. It's critical. You can have all the demand in the world, but if the regulatory environment isn't constructive, it's hard to invest and grow. And AEP has had some really significant wins lately on the state level. It's actually changing how they operate in some key places.
Let's Ohio. What happened there?
In Ohio, they got approval for a specific tariff for data centers called an Enhanced Financial Obligations Tariff. Basically, it makes sure these new large power users pay their fair share for the grid upgrades they require right up front. That protects existing customers from footing the bill. Plus, there's new state legislation, House Bill 15. It gets rid of the old way of doing things, these electric security plans, and brings in a multi-year forward-looking approach for setting rates. It means they can recover the cost of their investments much faster. Less lag.
Less regulatory lag. That seems to be a recurring theme. What about Oklahoma?
Similar story in Oklahoma. Their subsidiary, PSO, got the green light to buy a big natural gas plant, Green Country Power, 795 megawatts, needed for reliability with demand rising.
Right.
And they also got Senate Bill 998 passed there. This is a big one. It lets them defer 90% of certain grid investments as a regulatory asset.
Okay, what does that mean in plain English?
It means they invest the money now to upgrade the local grid, but they don't have to wait potentially years for regulators to approve recovering that cost in rates. They get to record it as an asset sooner. Again, it drastically cuts down that regulatory lag, makes earnings more predictable, and encourages them to invest faster. It's a game changer for improving returns.
Got it. Faster cost recovery, more incentive to build. And Texas, you said that was a huge growth area.
Texas has been very constructive too. AEP Texas won approval for a big 765 kV transmission project down in the Permian Basin. That's significant, opens the door for more of those ultra-high voltage lines. Their grid resiliency plans got approved too. But the really big legislative win is House Bill 5247. They call it the Unified Tracker Mechanism, or UTM.
UTM, what does that do?
It's basically a fast-track process for getting approval for their distribution and transmission investments. One single filing each year. It practically wipes out regulatory lag for those investments in Texas. They expect it to boost their earned return on equity significantly, maybe by 0.5% to a full percent, pushing their actual returns closer to what they're officially allowed.
So again, faster, more predictable recovery of their investments.
Exactly. And we're seeing similar things like large load tariffs to protect existing customers getting approved in Indiana, West Virginia, Kentucky as well. And speaking of West Virginia, they're in the middle of a rate case there now. Should have an order by late summer, maybe early September.
Okay, so a lot happening at the state level. What about federally?
There was a big development federally, too. That budget reconciliation bill signed on July 4th, it had tax provisions in it. AEP confirmed these provisions fully support their entire $9.9 billion 5-year plan for wind and solar projects through tax credits. That's huge financial backing.
So the federal incentives are locked in for their renewables plan.
Pretty much. They mentioned monitoring a July 7th executive order. But even if guidance changes slightly, they think it'll only impact a couple of projects way out at the end of the plan. And if needed, they'd just shift that capital to other generation projects. So manageable risk there.
Okay. And there was one other financial piece, something from FERC.
Right, FERC, the Federal Energy Regulatory Commission. They issued a final decision on how AEP treats something called net operating loss carryforwards, NOLCs, in their transmission rates. It's a bit technical, but essentially FERC agreed with AEP's approach. The immediate impact was a big one-time boost to their GAAP earnings, $480 million, or about 90 cents a share.
Wow, 90 cents.
Yeah, a nice windfall.
Yeah.
And it also provides a small ongoing benefit each year, maybe around 3 cents per share. Just cleans up the balance sheet and provides a little extra cushion.
So all this regulatory success, the strong earnings, the federal support, it sounds like they're positioning to invest even more, right? They mentioned their current $54 billion capital plan, but also a new plan coming this fall, around $70 billion.
That's right. A jump from $54 billion to potentially $70 billion for the next 5 years. It shows just how confident they are about this growth continuing. And where's that extra money going? About half of the increase is earmarked for transmission. Think more of those big lines, like the new ones in Texas, or joint ventures like Valley Link in Virginia and West Virginia.
Makes sense given the demand.
Yep. And then about 40% of the increase goes to generation, building power plants, renewables, and the remaining 10% to the local distribution grid. It's all focused on building out the capacity to meet that demand wave.
And funding a $70 billion plan. That takes serious financial maneuvering. They seem pretty proactive, though.
Very proactive. Their liquidity is strong, about $5.6 billion, and they've already made some big moves this year. They sold a minority stake in their transmission business back in June that brought in $2.82 billion, and they did a $2.3 billion equity offering earlier in the year.
So they've already raised a lot of the necessary capital.
Those moves basically covered their equity needs for the current $54 billion plan, and it got them on solid footing with the credit rating agencies. Now, for the bigger $70 billion plan, they're looking at all the options, maybe more equity, maybe hybrid securities. The goal is to fund the growth while keeping the balance sheet strong. The industry standard is usually funding 30–40% of growth capex with equity.
Okay, so they're planning ahead financially, looking even further out technologically. Small modular reactors, SMRs, AEP is exploring those.
They are. It's definitely a longer-term play, but they're starting the groundwork now. SMRs are seen as a potential source of safe, reliable, clean baseload power, carbon-free dispatchable power. They've actually started the early site permit process for potentially putting SMRs at 2 locations, one in Indiana, one in Virginia, and they're getting regulatory support too. Virginia, for example, passed legislation allowing them to recover up to $125 million for these early SMR development costs.
Interesting. What's the appeal of SMRs compared to, say, large traditional nuclear plants?
Well, the modular part is key. Instead of one huge reactor, you might have several smaller units. Customers apparently like that diversity. If one unit needs refueling or maintenance, the others can keep running, so potentially more reliable, more flexible. But we need to be realistic about the timeline. SMRs probably won't be commercially ready and widely deployable until, the mid-2030s. So AEP is definitely getting ahead of the curve by starting the permitting now.
Okay, so planning for the long haul there. Right, let's try and wrap this up. Taking a step back from our deep dive into AEP, we've really seen a company hitting on all cylinders, haven't we? Record earnings, this incredible contracted load growth, 24 gigawatts, with potentially vastly more on the way.
Yeah, that 190 gigawatt pipeline is just staggering.
And they've been very successful navigating the regulatory side, getting these constructive outcomes in Ohio, Oklahoma, Texas, federally.
Which is enabling them to plan this massive $70 billion investment program. They've been smart about financing it, too.
And they're even looking decades ahead with things like SMRs.
It paints a picture of a utility that's not just reacting, but really trying to shape its future in a rapidly changing energy world.
So maybe a final thought for you, the listener, to chew on. If utilities like AEP are genuinely seeing once-in-a-generational growth driven by these huge new demands, data centers, reshoring, electrification, what does that fundamental change in how we use energy actually mean for our power grids, their structure, their resilience, and for the communities that rely on them? It really makes you wonder how our infrastructure needs to evolve for this totally new era of electricity demand.